The rise and fall of Bernie Madoff. The biggest Ponzi scheme ever. Imagine trusting someone so completely with your life savings only to discover it was all a lie. A Wall Street icon for decades, Bernie Madoff was hailed as a financial genius who produced consistent, remarkable returns even during market crashes. He attracted billionaires, philanthropists, celebrities, and regular retirees to invest with him. A cornerstone of success and trust, he served as the previous chairman of the NASDAQ. However, the biggest Ponzi scam in history, a complex web of deception that came crashing down in dramatic fashion, was concealed behind his serene smile and bright reputation. When the world was rocked by the 2008 financial crisis, Madoff's empire fell apart. The shocking disclosure that followed included thousands of victims, almost $65 billion in fictitious earnings, and a whole banking system ashamed of it for not preventing him. The scandal involved betrayal, ruined lives, and the negative aspects of unbridled authority in addition to financial gain. This is the tale of how Bernie Madoff achieved unthinkable success, deceived the most brilliant minds in finance, and then fell from grace as the mastermind of a global hoax. It's a tale of trust, greed, and lessons that still apply today. Let's watch in 7 points. 1. Who was Bernie Madoff, the man behind the curtain? Born in Queens, New York in 1938, Bernard Lawrence Madoff was an apparent self-made success story. From humble beginnings, he used the money he made from lifeguarding and sprinkler system installation to start Bernard L. Madoff Investment Securities LLC in 1960. He developed to become one of Wall Street's most admired individuals over time. Madoff was known as a financial whiz that often produced large returns while serving as chairman of NASDAQ for multiple periods. His trustworthiness, intelligence, and charisma made it simple for investors to entrust their fortunes to him. But behind the scenes, Madoff was planning the largest Ponzi scam in the history of the financial industry. His deception was based on his reputation. Because Madoff was well known in the financial world and had the support of powerful banks, celebrities, and organizations, clients felt safe. Ironically, he betrayed hundreds of people using his fame and credibility as leverage. 2. The Ponzi scheme's mechanisms. A Ponzi scheme is a dishonest investment swindle that promises investors large returns at minimal risk, instead of leveraging profits from the operation of a genuine firm. It uses funds obtained from new investors to produce returns for previous investors. This traditional methodology was used in Madoff's operation, but on a scale never before seen in history. Regardless of market performance, Madoff guaranteed steady returns of 10 to 12% per year. Rather than investing the funds, he transferred them to a Chase Manhattan bank account and utilized them to settle withdrawal requests from other investors. The deception became increasingly complex over time. He created false statements, falsified transaction confirmations, and persuaded auditors that everything was legal. The firm's operations were oddly split. The bogus investment advisory arm was located on the 17th floor of the Lipstick Building in Manhattan, while real businesses operated on the 19th floor. A warning sign that few saw in time was that no one was permitted entry without authorization. 3. How long? He was able to get away with it. It is shocking and unsettling that Madoff was able to evade authorities for so many years. Financial analysts, notably whistleblower Harry Markopolos, voiced suspicions about the fraud, but the Securities and Exchange Commission (SEC) consistently failed to find it. Beginning in 1999, Markopolos produced comprehensive research explaining the mathematical impossibility of Madoff's returns. However, the SEC disregarded these cautions. Madoff was able to influence both investors and authorities thanks to his charisma and what appeared to be honest business practices. He exploited the banking industry's lax enforcement and hedge funds' lack of transparency. The repute of his company, his personal position, and the intricacy of his business all played a part in the protracted delay in learning the truth. Even well-known financial institutions and investors didn't think he was a scammer for years. The victims. Fortunes lost, lives lost. The impact of the scheme's failure in December 2008 was catastrophic. An estimated $65 billion in paper wealth was lost as a result of Madoff's scam. Thousands of investors were impacted, including pension funds, philanthropic organizations, and well-known people like Steven Spielberg and Kevin Bacon. 2 years after the scandal surfaced, in 2010, Mark, one of Madoff's sons, committed suicide. Due to the psychological effects of the loss, some victims experienced despair, bankruptcy, and in certain situations, early deaths. Faith in regulatory agencies was severely damaged, and trust in financial institutions fell precipitously. Nearly all of the assets of organizations such as the Elie Wiesel Foundation were gone. The collapse. How everything failed. The 2008 financial crisis was a crucial factor in Madoff's empire's collapse. As the economy collapsed, more investors started asking to take their money out. However, Madoff was unable to satisfy the increasing demands since there was no real investments, only a Ponzi scam. He eventually admitted the fraud to his sons, who were employed at the company but supposedly did not know about it. They handed him over to the police. Madoff was taken into custody and accused of securities fraud on December 11, 2008. The world financial system was rocked by the news. The extent and breadth of the fraud were exposed by investigations, which also showed how Madoff maintained the scheme by using feeder funds, who were middlemen who brought in new investors. Madoff entered guilty pleas to 11 federal charges in 2009, including money laundering, wire fraud, and securities fraud. He received a 150-year term in federal prison. Although no punishment could completely repair the harm he had inflicted, the sentence served as a symbol of justice for his victims. 6. The repercussions. Court cases and rehabilitation activities. Following the scheme's disclosure, the process of recouping assets and paying victims started. The court-appointed trustee, Irving Picard, started a vast legal battle to recover money from people who had made money off of Madoff's scam, whether they realized it or not. Since then, billions have been retrieved and dispersed to victims. Of the estimated $20 billion in primary losses, nearly $14 billion had been recovered and distributed to investors as of recent years. For such a large-scale fraud, this recovery rate is seen as exceptionally high. The SEC was heavily criticized and changed to enhance oversight and handle whistleblower complaints. Financial companies were under pressure to improve accountability and transparency as investors grew increasingly doubtful. 7. Legacy and acquired knowledge. In 2021, at the age of 82, Bernie Madoff passed away in prison. His passing signaled the conclusion of a tale that altered the financial landscape forever. His experience serves as a warning against institutional flaws, avarice, and naive trust. The Madoff crisis revealed serious flaws in regulatory frameworks and demonstrated the significant role that psychological manipulation plays in financial fraud. It also underlined the importance of exercising due diligence, which includes independent audits and verified data, in addition to reputation. Tighter regulations and improved investor protection resulted from the forced reforms in the investing sector. Trust needs to be established and validated. Being transparent is a must. Additionally, if anything looks too good to be true, it most likely is. Concluding remarks. One of the most spectacular financial tales in history is still the rise and collapse of Bernie Madoff. Madoff's story is both heartbreaking and educational, spanning from his early years as a revered Wall Street figure to his discovery as the mastermind behind a decades-long scam. It serves as a reminder that we must always maintain our ethical vigilance and that even the most dependable people can turn on us. Even if his victims might never fully recover, the lessons learned from his deception have forever changed and, hopefully, strengthened the financial world. Let us know in the comments what you think about the rise and fall of Bernie Madoff, the biggest Ponzi scheme ever. And don't forget to like, subscribe, and stay tuned for more captivating content on our YouTube channel.